Hey Brew Crew, Brewer here. Welcome back to another weekend update. Let's dive right in, starting with SPX on the daily. If you recall from last week's video, I had drawn a trendline support here connecting the lows of March to June, and I mentioned that this was a crucial point for SPX as we were sitting here at the support last Friday. Fast forward 1 week and notice how all we've done is hang out around this trend line. The market is having a hard time going up, but also a hard time going down still. Look at how the 20 MA has held, and look at where we closed on Friday. Back up at this trendline support with a huge bottoming tail. Bears out there should be a bit worried. Now, if the bulls are able to finally step on the gas and take us above the high made from the balance area of July 21st to 23rd, then the next upside target, I think, is a gap fill up here at 33.2845. Switching over to the NDX. Same thing here. Last week we closed below this trendline support, but this week we hovered around the trendline support, and then on Friday we completely closed above it with a huge bottoming tail too. This is probably quite frustrating for the bears. I'd be watching a break of this trendline resistance here, and if so, the all-time high at 11,069 would be the first target, followed by who knows what, okay? Switching over to the rut, which is a bit weaker. This whole week, the rut just moved sideways, but was able to hold the 20 MA, 200 MA, and trendline support. So the bull case is still intact until otherwise. Of course, watch for a close below this trendline support. That could bode well for the bears as that opens a door to the bottom of this balance area around 1375. And of course, a breakout above the July 23rd highs, and we look to target the June 8th highs at around 1537. All right, let's switch over to the profile on the ES. Here, we're looking at the past 2 weeks of trading. Notice on Friday, we spent a majority of time and volume trading down here. In fact, all of this past week, we spent trading down here with value area overlapping back to back to back to back. This leads me to believe that this sharp rally up into the close on Friday is nothing more than a short squeeze that doesn't mean much. However, the way to read these overlapping value areas is not to bet that we'd come down here, but to keep a mental note of this going forward so that if we do see some type of sell-off from the highs up here, to look for this entire zone as a target for where price will come down to. The first target being Friday's POC here at ES 3227. The bullish case is obviously a breakout above the RTH high at ES 3272, in which case I'd expect the resumption of this gap fill up to 3328. And I'd expect that the breakout should be strong given how we've basically had a triple top up here from last week. Now, if we actually hung out here for a couple more sessions early this coming week, then I'd expect the breakout to the upside to be even stronger and the odds of a gap fill to be relatively high because that pressure built up, consolidating up right at the edge of this door is going to make bears very nervous. Now, this also means if we look above and fail to find acceptance, that the return into this balance area should be followed up with a sell-off because remember that a look above and fail back into balance should target the other side of balance, which would be down here at around 3190, roughly 80 points below the RTH high. Of course, target the POC first because that'll be the first signpost, and then monitor for continuation via the internals for the second signpost target at 3190. All right, that's it for the market update. As always, we're on Twitter, Discord, and Twitch in the mornings. Join us on those platforms. Links in the description below. All right, I have a feeling next week is going to be more active, so make sure you stay notified by checking out those links. Stay safe, Brew Crew. See you in the next update.